Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. Thank you for joining us. Always delighted to share this time with you. If you have not already, hit that subscribe button on YouTube, BitChute, SoundCloud. We have a dear old friend of mine today, Adam Dubove. He is the co-founder of Ichimoku Fibonacci. This is a trading and finance community, and he's based in Buenos Aires. We are going to delve into all that is Bitcoin and cryptocurrencies today, which is a topic that just never runs out of spice. Adam, welcome, and tell us, was this El Salvador decision a game changer?
Hey, Fergus, how are you? Thank you for having me again. And well, I think El Salvador decision is a game changer. First, for El Salvadoran government, maybe not a lot for Salvadorans. That will depend on them, whether they want to adopt or not Bitcoin. But I think the government, the Salvadoran government, has just indicated to the world that they are open for business, for Bitcoin companies, for Bitcoiners who want to invest or live in the country. And also, I think at an international level and at a geopolitical level, it has some interesting consequences. On the one hand, I believe that the decision of Bukele, the Salvador president, Nayib Bukele, is a bit related with the recent conflict with the U.S. They were criticized by the U.S. government after sacking some judges from the Supreme Court last year. Bukele has been also criticized about making and doing some anti-corruption regulations in the country, and I find that I believe that one of the reasons that he took this decision to make Bitcoin legal tender in Ecuador was stemmed from this antagonism with the United States, which is great because in previous eras, in previous decades, if a government would want to show the finger to the US, they would join a communist bloc, or they would start training guerrilla. So I think Bitcoin, in some sense, it's a nice way and a better way to say the US, I don't care about what you think about my country, or I don't care about your foreign policy. And on the other hand, it puts a problem on the international regulations about currency, because now I assume, and I think that the International Monetary Fund has said something about this, that this declaration of Bitcoin as a legal tender in El Salvador should force the international community and international regulations and local regulations in every country to consider Bitcoin like any other national currency. Otherwise, they wouldn't be upholding El Salvador's right to define what is a legal tender in their country. But going back to your question about if this is a game changer or not, I think that those Salvadorans who embrace Bitcoin, at least as a way of getting remittances from the US, El Salvador's economy that relies heavily on US remittances, I think it's around 22% of the GDP is represented by the remittances that come from the US mainly. So being able to receive remittances without the costly commissions that are charged by Western Union, MoneyGram, and whatever money transmitter service they use, I think Salvadorans can also have take advantage of this decision.
That's peculiar to me, Adam, because I have experience transferring Bitcoin and transferring through Western Union. And to be frank, Western Union usually has lower transaction fees than trying to transact through cryptocurrencies. Is it because there is a subsidized process in El Salvador to facilitate this, that the transactions will be cheaper?
Well, I think first, sometimes for people sometimes not everything it's money. There are also not some other advantages. Like, for example, a person in El Salvador would have to go to an office of Western Union or of MoneyGram or wherever in order to get the cash, the US dollars that are sent from abroad, and this implies some dangers for the person who is going to a place that everybody knows that that he or she is going to live with money, with cash, and they can get robbed. So on one hand, we have also to consider all these advantages. But in regarding the cost of a transaction in the Bitcoin network, what El Salvador is aiming to use is a second layer solution that was designed in order to facilitate payments in a way cheaper and faster way than using the Bitcoin blockchain network. So these payments are off-chain, but they have the same assurances or almost the same assurances that a transaction on the Bitcoin blockchain, as they are immutable and they can be reversed and they can be censored. So it shares the same features, but it's designed in a way that is better for using it for everyday payments, for sending remittances, etc., etc. Right now, using the Bitcoin network, it's not very expensive as we record this, but probably when the activity peaks up in the blockchain, we're going to see again maybe $20, $25 for a transaction, which is a lot of money. So the Lightning Network, the second layer solution, solves in a way, it's attempting to solve what is called a scalability problem.
Yeah, the scalability. Yeah, we're jumping a little bit there. So I want to try to resolve this, and maybe there is no resolution. Maybe it's a wait and see scenario. But there's been a lot of tension, I guess, among advocates, because this is the Gold Newsletter podcast. We're all fans of precious metals and sound money, and in some ways, so long as Bitcoin is an enemy of the Federal Reserve, we're pro or I'm pro Bitcoin. However, the preference, of course, among advocates of sound money is for a natural bottom-up use or adoption, rather than a president saying this is what you will use. So it's a dilemma, maybe.
Absolutely, and I totally agree.
Yeah,
I totally agree with you. I think like social change and the adoption of new technologies and the adoption of new ideas are always bottom up, and they can be imposed from the government and even less imposed by force. And yes, I have some internal conflicts with this decision, because on the one hand, Bitcoin, the nature of Bitcoin is that it's an open, permissionless network. And on the other hand, we have the Salvadoran government saying that everyone in El Salvador, apart from some exceptions that are they include a lot of people. No, they include a lot of people that say if you don't have the means to or the knowledge to accept Bitcoin, you're exempted from accepting it. And I think that's a bit. I'm not very comfortable with a decision like that. I'm not a fan of legal tender laws at all. And I don't think that Bitcoin needs the legislation like this one around the world. Bitcoin just needs that not to be bothered. I mean, if they want to fuel the Bitcoin economy or to attract Bitcoin entrepreneurs, the best decision or the best decision to make is we are open for Bitcoin for Bitcoin. Maybe this law, in the case of El Salvador, backs a little bit more the decision of El Salvador that maybe next year or the following year they will undo this. It gives some more assurances for investors or for people who want to move there. But yes, I didn't embrace this news as it was 100% positive. but I think it's 100% positive that a lot of people in El Salvador are getting exposed to Bitcoin. And let's not forget that this decision was born in a small beach in El Salvador called El Zonte, now rebranded as Bitcoin Beach, which was a private initiative of some Bitcoiners that decided to create a circular economy in that town with Bitcoin, educating people about Bitcoin, educating people about the importance of some money. So in the end, the decision of El Salvador is the result of great work that is being done up there, and they are helping the locals to understand and use Bitcoin. And that's from a more bottom-up approach than what happened on a national level.
So to some degree, actually, we should not interpret this as purely a presidential decree, rather that he was recognizing what was already, to a small extent, growing in El Salvador.
Well, yes, I would say that probably Bukele saw in El Zonte good results of the experience, people being able to receive money from abroad with a low cost and having a way of saving even better than the US dollar. So yes, I think that it was in a part, like you say, like trying to extrapolate the Zonte experiment to the whole country. The problem is that the Zonte was bottom up, and it's and then the Salvadoran experiment it's top down.
It's top down, yeah. But so it probably on net is going to help Bitcoin adoption with some shortcomings. So we'll say yes, there are challenges with this, but to some degree, it's going to help Bitcoin adoption. Now, there's a lot going on in this space, and I know you are just the man to explore what's going on with cryptocurrencies. So we have the El Salvador development, but at the same time, as Bitcoin gets more prominent, people feel threatened, right? Regimes feel threatened. So you mentioned that the Chinese, for example, are actually getting serious about cracking down on this and banning Bitcoin mining. So does that mean in China, both use and holding of Bitcoin is illegal and mining is illegal? What exactly is going on there?
Well, I'm not sure really if it's banned the use of Bitcoin. I think Bitcoin trading is banned in China, not hodling. And now I think we heard this news several times before, but this time is real. That several provincial governments of China have ordered miners to shut down their business. And I read on Twitter a very accurate tweet that said this is the $1 trillion mistake of China, because what happened after this decision? The Bitcoin hash rate, which is the computing power that is now secure in the Bitcoin network, was drastically reduced by, I don't have the precise number right now, but maybe around 50% from the maximum computational power or hash rate that had a couple of months ago, because mining in the case of Bitcoin is movable, it's portable. So if China has banned Bitcoin, now miners are seeking the next place where they can find cheap energy sources and set up their mining rigs again. And probably in a couple of weeks or maybe a month at most, we are back at those levels of hash rate. But the Bitcoin mining will be much more distributed around the world. We have a lot of miners moving to the US. You have miners moving to Kazakhstan. We have miners moving to Europe, looking for renewable energies there, which are the cheapest to mine Bitcoin. And these China, with their solution, with their decision, have just solved one of the main criticisms of Bitcoin. Everyone said Bitcoin is controlled by China. All the miners are in China, so Bitcoin is under Chinese government control. Well, Chinese government have just said, okay, we don't want to control any more Bitcoin. Go westward.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
Hi, this is Brian London, and I'm here this week with our CEO interview, wherein we interview the CEOs of the companies in the Inventa Capital Group. The Inventa Capital Group, of course, is the sponsor of the Gold Newsletter podcast. This week, we have Chris Donaldson back of Outback Goldfields, that's symbol OZ on the Canadian Stock Exchange. Chris, I think we want to talk a little bit about the markets right now and the opportunity they represent. As we're speaking, I'm finalizing our August issue of Gold Newsletter and commenting on how the stock charts for a number of the companies we're following have just taken nosedives over the last month or so. In reaction to, or the lack of reaction in the metals markets, I guess, the summer doldrums, the market's just kind of hanging in there and no real movement, no real impetus for gold or silver. And the stock charts have reflected that. What's really happened for Outback Goldfields is a combination of that, but a kind of a special situation in Australia where you're located. Can you expand on that a bit?
Yeah, hi, Brian. Thanks for having us on. Of course, Outback is, as you know, a relatively new company. We have the 4 projects in and around the Victorian goldfields, or in the Victorian goldfields in and around the Fosterville mine, which is known to be the highest grade, highest margin mine in the world here. So we started our phase 1 exploration campaign in February and have a good crew on the ground and working 3 out of the 4 properties. And things were going quite well until we hit this summer here, as you said, and a couple things have happened. One, Victoria went on a lockdown over the last month, and it's a hard lockdown there. You know, people are working from home, and if you try to visit, if you can, you have a full quarantine in your hotel room and so on. So people are working from home, and it kind of is hampered our ability to get out there and get some land access. It's hard to knock on doors and ask people to let us onto their land when you can't even you're not supposed to speak to them there. So it's been a little pause, and that, and combined with just the markets in the summer here, as we've seen many years in a row, interest tends to wane a little bit. But on the other side, we're still very active. The COVID restrictions are lifting now, and we're back up doing a huge sampling program, and we're going to start drilling again in a couple of weeks. So good spell, a good opportunity. I mean, there's no real reason, our share price has gone down 40% in a month, except for a temporary hold on activities. And like I said, we're going to be gearing up and should have a steady stream of news coming through the fall. And not just us, as you know, this region is one of the hottest regions in the world right now for gold exploration, rivaling maybe only Newfoundland, gaining headlines. And we've seen other companies recently. E79 had a very, very good discovery, and I think it was 11 meters at 160 gram per ton, and they popped 250%. And Mandalay Resources had a good one, and they doubled overnight as well. So once we get back on track and start getting the news flowing and really the activity ramped up again, which is starting next week, I think we'll be in pretty good shape.
Yeah, part of investing in, for experienced people who've been investing in the junior mining shares over many years, is you look for these kinds of exogenous events or things that don't affect the projects themselves that come around and create a temporary buying opportunity. It really looks like one of these is developed for Outback, and your properties, again, are just nothing short of extraordinary, which is why we recommended the company originally in Gold Newsletter, because on one of your properties, there's been 17 million ounces of gold produced historically within 10 kilometers of the property. And yet that property, because of technical limitations when in the previous gold rush, and because of some cover on the ground, has remained relatively unexplored. And you have not only begun exploring these properties, but you're adding to your positions because of what you're finding on the ground. Can you tell us a little bit about that?
Yeah, and so the property you're talking about is Ballarat West, and you know, it's a very good example of what's happening in the region. So despite the fact there's 3 mines that combined have produced and are producing 17 million ounces of gold, that's within 3 miles of the property. You look at this large land package that we have in that property, you know, it looks like all the exploration comes up. You look at the historical workings and it stops right at our property. And the reality is it did, but the reason is because it dips under cover. And in this case, it's a shallow cover of basalt, and you know, so what the new you know, thesis on the area is that old historical alluvial gold, which is at or near surface, has to have some kind of fluid source. And if you go a little bit deeper, you go below cover and look to find the gold, you can find this ultra high grade feeder zones, which we've seen with Fosterville and now with Mandalay. So that's what we intend to do. We've got a huge sampling program going on right now, trying to identify the targets on that. And if you talk to our chairman, Craig Perry, which I know you have a couple of times, he's most excited about this particular one, and thinks we have, you know, as good a chance as anybody anywhere in the world to find a multi-million ounce discovery on that, just because of location, just because there's similar structures that go right through the property. They're just dipped under cover.
Well, what are we looking at in the near future for your exploration efforts and potential catalysts?
Yeah, so I mean, I explained we got a sampling program looking to generate some targets on the Ballarat West. Mm-hmm. Our Ewangroon property, we've already identified some high tenor arsenic anomalies, which are indicators of potential association with gold. So we were looking to drill on them. We've just resumed negotiating some land access in that area, probably 2 to 3 months on that. But we also have on the other side of the property, in and around a historic mine called Golden Jacket, which was ultra high grade, 250 gram per ton. We've got a RAB program. RAB drilling is shallow drilling. And the idea there is you're looking for markers for gold as well. So we'll drill about 200 holes, which will start next week in and around this mine to identify some real targets. We'll probably do a couple of cheeky diamond drill holes as well right under the mine. We may hit something, but also it'll give us a better understanding of the structure of the mine right around the mine as well. So that's our next step. And then we'll take a look at what we have between the 3 properties, the Glenfine, which we've already drilled, and then the other 2 properties, which we're identifying some targets, and then figure out what to do with the second half, or the second part of the program, which we're calling phase 2 of our exploration. So we've put, you know, phase 1 will complete at some point this summer, and that'll be about $3 million. We'll put another $3 million into exploration for the balance of the year. So lots up ahead. It should be a pretty interesting fall for us.
So considering where the share price has come over the last month or so, largely again in reaction to this COVID-oriented, spawned shutdown in Australia and in Victoria in particular, if we have any kind of normalcy, any kind of seasonal strength in gold, and word getting out that you're back to work on your properties, we could have a quick, and if you've dropped 40%, that's going to imply a 50 to 60% gain just to get back where you were before all of this happened. So, if you look at your share price right now, you look at your cash position, look at your property portfolio, and the amount of news coming up over the months ahead, this is obviously, well, it's one of our top recommendations going into the fall.
Yeah, I mean, we're in good shape, and I actually picked up some more shares this week as well. So that's pretty. My money where my mouth is there as well. So, yeah, no, like I said, or like you said, we've got cash in the bank. We got a full program ahead, and just waiting for the results. And we've seen that with the other companies who've hit some good results. They really pop. And I really think we're oversold here, and there has been a lack of interest just in the last month. It won't take much to move us back up. We're fairly tightly held as well.
Well, great, Chris. Wonderful to talk to you again. Looking forward to what the weeks and months ahead hold for Outback Goldfields. Thanks again.
All right. Thanks, Brian.
Okay, now this is where, these developments to some degree suggest the resilience of Bitcoin, in that governments, to some degree, even the Salvadoran government, whether they promote this or not, Bitcoin is just growing somewhat spontaneously. And if the Chinese push back, it just moves quickly. This is really what I wanted to get to with you, Adam. My sentiment over the last few years has been that, yes, Bitcoin has huge first mover advantage, granted, but its actual use as a medium of exchange has been limited, especially obviously as it's become much more widely held, and its scalability has been a challenge. Now, you over time have become more and more of a maximalist, and so we have a little bit of disagreement there. So I want to tease that out. Why are you optimistic that Bitcoin can stand the test of time and beat out all these alternatives that see Bitcoin's problems, all the stablecoins, for example? Why can Bitcoin beat them?
Well, I think there are some factors that are irreproducible in any other competing coin that is trying to compete against Bitcoin. First, the way that it was created. Remember, Bitcoin was created by a pseudo-anonymous person called Satoshi Nakamoto. No one knows who is this person. So everyone was able to mine Bitcoin. In the early stages of Bitcoin, anyone with a computer, you don't even need any specialty equipment. Just with your home computer, you could mine Bitcoin and get Bitcoin in your Bitcoin wallet. Back in those times, there were no wallets like we know today, but there was a Bitcoin wallet, like a mobile app. It was a bit more complex. So, and we have this way of that the project is born. And on the other hand, we have a lot of projects that are led by a person that they have pre-mined the tokens that they are selling and sharing as the next Bitcoin or the next blockchain solution. And in reality, if you are pre-mining, you own 100% or 50% or 40% of the supply of a currency at the beginning. You are in the end selling your position to the next fool that is buying. It has an unfair component in its conception, in its birth, because you are starting with an unfair distribution. That would be like one point. Bitcoin has improved. I think it has improved money 10x. It has been an improvement that we haven't seen in the last, maybe since Greeks adopted gold as money. This is the next the next step in the evolution of Bitcoin.
Okay, Adam, let's clarify. So just your first challenge is that you believe Bitcoin was more widely distributed at the outset, whereas the new coins coming in tend to be concentrated in their holdings.
Yes, and it's fairly distributed. That's the most important thing. Bitcoin is fair in the sense that if you wanted to get Bitcoin in the early stages, you didn't even have to pay money to get Bitcoin. You just had to get to pay for a computer to get Bitcoin. So I think that's a point that not a lot of people takes into account when we analyze other projects. But I think that the most important thing about Bitcoin, it's a network effect. So right now, Bitcoin is the largest cryptocurrency. It's one of the sole cryptocurrencies that have the proposition of their proposition of value is to become a store of value for long term and to become money. So most of the other projects are focusing on other stuff. But I think that one of the reasons that people tend to think that Bitcoin could be easily replaced is because there are some misconceptions about the technology of Bitcoin. For example, you would say there is some faster coins that maybe a transaction, on-chain transaction in another coin takes 2 minutes, takes 1 minute because it has a larger blocks or faster or a larger capacity to process transactions. But the real question is, how secure, how irreversible are those transactions after those 2 minutes? And and if you could hack a blockchain that has maybe a 2-minute block and your transaction gets confirmed immediately, but it does not provide you the same assurances of Bitcoin in terms of immutability, in terms of security, and in terms of irreversibility. So and also in the end, you don't have like 300 different store of values. The fact that we have like 100 different national currencies right now, it's a deformation and a consequence of nationalism in the monetary area. Because before, when the world worked under the gold standard, like currencies were just a way of there were relations, equivalents between two amounts of gold. They were just a fiction. It was fictitious. So and then now we have all these different currencies that are unpacked from any physical asset or anything that its supply can be controlled, and in a way, governments can manipulate and debase their currency. And in some way, you don't have the assurance that every other project that is not as decentralized as Bitcoin, it has not this history and the resilience of Bitcoin would be, it would have an immutable monetary policy, for example.
Okay. Yeah, there's a lot to unpack there, Adam. And my basic view has been, as I said, that Bitcoin has first mover advantage, but there are others coming up. And your claim,
I think
so your claim is that the challenges we observe can be overcome.
Mm-hmm. Yes, I think that the problem sometimes analyzing Bitcoin is that Bitcoin is being analyzed as a consumer product, like if it is an iPod or if it's a social media website. But Bitcoin really, it's a protocol and it's a decentralized network, and it's open software, or free software. So it can evolve, it can improve, it can adopt better technologies. Let's say tomorrow it comes a coin with a better technology that has improved, that it would be good for Bitcoin to be incorporated in Bitcoin. The Bitcoin can do it. It can adapt, and it can change and adopt new technology if needed. What will never change is the number of Bitcoins.
Yeah, well, that's one of the baked in elements. Do you want to push back against those people who just say Bitcoin is inherently volatile?
Well, I think everything is volatile in the sense that prices are subjective prices. So in a sense, everything is volatile, and Bitcoin has been very volatile over the years. There's one good thing, that volatile has been generally upwards, so it's good volatility. And another thing that it's been analyzed, that over the years, Bitcoin becomes less and less volatile as the market matures, as more people joins this market, and there's more sophisticated players in the market, such as hedge funds, such as institutional players. So I think this trend, I don't have any information or any data about this, but I will find it interesting to think, what was the price of gold when it started to be used as a store of value, and how volatile it was back then. Of course, we didn't have all the information that is available today, no computers, no internet. But I guess that gold in its beginnings of its monetization was much more volatile than was 500 years or 1,000 years later.
Well, not only would it have been volatile at that, in its early centuries, but there would have been great arbitrage between regions for its value. Of course, that's been wiped away with time. Now, we can get stuck in these details, and we do have an episode with Larry White here, a top economist at George Mason University, a brilliant free banking theorist. However, sometimes I would like to just push all this discussion to the side and say, okay, what does the market tell us, right? So whether I like the altcoins or Adam doesn't, that doesn't really matter. We're just two guys. What does the broad swath of participants, what do they think, right? And for whatever reason, Bitcoin has held its sway with market capitalization, 2 or 3 times Ethereum or Ether?
Yes, about that. Depends on the moment of market, but yes, it's about 3 to 4 times.
Yeah, so that suggests, unless we think this is just an extremely inefficient market with a lot of herd mentality and foolishness, I'm reluctant to assume stupidity in people, actually. When it comes to their own money, they actually do use their brains in general. When it comes to other things, there's less of an incentive to be intelligent. But when people are actually using their own money, they tend to be more careful than when they're spending other people's money, for example. So why don't you tell me then, why don't you explain that to me? Why do you think there's been such dominance among the participants? Why do they believe that Bitcoin is the way to go?
Well, I think first is what the Bitcoin ecosystem, how strong and robust it is. And by Bitcoin ecosystem, I mean all the companies around Bitcoin that provide services, all the wallets that are accessible and available to use Bitcoin, how Bitcoin has been accepted, maybe in a small way, but if there is one cryptocurrency that is going to be accepted, it's going to be Bitcoin. And the reason I think that the network effect is very strong in this kind of developments. I mean,
so let's just clarify for people. The network effect says that an item or service becomes more and more valuable as the number of participants grows. So it's a bit like Amazon or Craigslist in the United States, or Facebook. If let's say you quit Facebook and go to Gab, why is that a problem? Because there are just a fewer people on Gab, right? So the value of the Gab platform is lower, even though I use Gab, but because there are fewer people there, the value comes from people being in one place or using one item and then having that networking capacity. So your point largely is that there is an infrastructure and network built up around Bitcoin that is hard to shake.
Yes, not only that, that's just a factor, but I think the most important thing about Bitcoin is the immutability of its monetary policy. I mean, the fact that there are going to be 21 million Bitcoin and the staunchness of Bitcoiners to defend that point, and the history and reputation of Bitcoin in the last 12 years, that there was no such discussion like happened in Ethereum. If are we going to increase the rate of new coins created? Are we going to reduce it? How are we going to do? These kind of discussions generate the same uncertainty that has in the fiat money world, that where when a group of people or a person can decide its monetary policy. And in Bitcoin, there's no governance, there's no governance protocol like in many altcoins where you can vote for one or another proposal. In Bitcoin, you vote with your computer. If you're running software and validating transactions that are related to the rules. But going back to the network effect, I think there's a very important difference between maybe choosing between Twitter and Gab or between Facebook and MySpace. You can have both accounts at the same time. You have a Twitter account, you have a Gab account. But in the case of money, the use of Bitcoin is exclusive of the use of another currency, cryptocurrency. So if you have your money in Bitcoin, you don't have your money in Ethereum or in Monero or in US dollar. And if you are putting your money in a secondary in an altcoin, you're saying, okay, I believe that all the millions of people are using Bitcoin eventually will move to my currency and it will be massively adopted. And I think it's a bit delusional to think that among the 8,000 cryptocurrencies that exist, you will choose the one that people will move to it because it's better than Bitcoin. I think that's a bit maybe a bit delusional and a bit with a high self-esteem. But and that's why I don't understand people trying to look for the next Bitcoin when we already have Bitcoin and it's still growing.
Yeah, so you're just saying that even if there were another currency that basically replicated Bitcoin, assuming you're going to be able to persuade all these people to move over is, as you said, a bit delusional, right? You have to have a very stronger value proposition to get people to actually switch like that. Okay. There's a lot to say about this, and I mean, I'm obviously fascinated by the way that cryptocurrencies have and will continue to rise. And perhaps the most exciting thing that gets me a bit giddy really is seeing central banks get flustered about this. Delicious, right? Wonderful. Because they, as you said, the central banks are a very odd nationalist program, which basically is they're there to inflate the power of central governments and to collect seigniorage, which is a tax on the people. So interesting, your claim basically is that Bitcoin is an immutable or leaderless network, and that ironically is to its advantage. And people don't have to trust in anybody. There's no one to trust. So, although check your exchange, there are a few exchanges have gone bad.
Well, not your keys, not your coins. So it's decentralized if you use it decentralized way. And there is another saying in the Bitcoin community: don't trust, verify. So there you are. It's trustless.
Don't trust, verify. Yes, because I have seen, and unfortunately, because of regulations in the United States, people have gravitated towards Coinbase and others because those firms basically their value add is just that they jump through hoops better. They jump through regulatory requirements better than others, and therefore they have achieved they've overcome barriers to entry. Okay, people, we will include all the links to Adam Dubove's work at goldnewsletter.com/podcast. I fear Ichimoku Fibonacci is a little bit difficult to say through a podcast in terms of the spelling. But people go there and follow Adam's work. He's a brilliant man. And especially if you're a Spanish speaker, you can get his content there. Otherwise, Adam, it's great to catch up with you. And I just look forward to your continued rise in this space. So thanks for your time.
Great to talk to you, Fergus.